7 stocks I'm buying now, June 2023 edition. Welcome in, folks. I am looking so forward to this. My favorite video I do each and every month where I go over stocks. I'm buying the bull thesis on those, how I think about the risk reward versus these stocks, why I believe they're extremely undervalued, why I believe I'm going to make a great return on investment in regards to these positions. Now, I know sometimes these videos can get fed out to the algorithm, and sometimes people see them that maybe don't usually follow my channel and whatnot. Just understand I'm a long-term investor. I'm not usually looking at these stocks as like some short-term flip and trying to buy them today and sell them tomorrow or buy them for the next week or something like that. I'm usually thinking longer term in regards to all these positions. Now, a lot of people have seen the performance of stocks like Nvidia, Tesla, Meta, Palantir, and many other stocks this year. And those stocks have done absolutely tremendous, right? And a lot of us that are shareholders of those companies have benefited in a substantial way. And it gives the illusion like there's no opportunities in the stock market. But in reality, I can tell you there's an enormous amount of opportunities in this market. One of the ways you can usually tell how many opportunities in the market is how many stocks I'm mentioning on these videos, because sometimes I do 2 stocks, sometimes 3 stocks, sometimes 4 stocks. When you see me do 7 stocks I'm buying, you know there's a lot of opportunities in this market right now. And I see them all over the place. There's just different opportunities than there was 6 months ago. And they're going to be, these opportunities today are going to be different than they're going to be in 6 or 12 months from now. Valuations change immensely. Stock prices go down a lot. Stock prices go up a lot, right? And so between all that, you have a lot changing all the time. So hope you guys enjoy this video as always. I appreciate everybody that's subscribed to the channel. Thanks so much for being here. I always appreciate you guys joining me for these videos. Also, if you're somebody out there that wants to take your investing game up to the next level, I want to invite you to apply for my private group. That will be the pinned comment down there to apply for my private group. Alrighty guys, let's get straight into this. Revolve stock, RVLV. It's a $15 stock roughly here today. This is a tremendous opportunity I see out there in the market right now. Revolve stock has fallen immensely, right? The stock chart's pretty self-explanatory on how bad of a fall this has had, right? Now, in regards to Revolve, this is a great company with a great management team, e-commerce player, and they've done tremendous building this brand over time. And you can look at the revenues over the last 10 years of this company. You can look at the net income of this company over the last 10 years. They do a phenomenal job running this company. They own the Revolve brand, was very, very popular. They also own Forward, FWRD, which has a lot of super high-end brands, Balenciaga, Bottega Veneta, Saint Laurent, brands like that, right? Some of them you can buy like pre-owned bags and things like that, or dresses or whatever. And but most of their inventory is like brand new stuff. And so these brands are phenomenal, but let's be honest, okay? Why has this stock gotten hit so bad? Okay, because I think that's worth addressing. Why has this stock got hit so bad? I'll tell you exactly why the stock has gotten hit so bad. We've had to deal with the highest inflation we've had to deal with in many, many decades. When you have something like that happen, there's going to be naturally a pullback on spending on, guess what? A lot of these sorts of items, right? Handbags, dresses, all this type of stuff. Either because it's forced or because people just want to pull back, right? Which is kind of like a recessionary force. So that's why the stock has pulled back in an immense way, right? The management team has done as well of a job executing in that environment as you can possibly do. But there's no doubt the environment that we're going through currently, the economic environment, is definitely not ideal for a company like Revolve to have to go through here in the short term. Now, I've owned this company for many years. I bought shares even back in February 2020. The cheapest I ever paid for shares was $8.88. That was in Rona, right? But that was a crazy crash scenario. The most I paid for shares, it looks like it's like $24 or so. And this is a company that I'm a proud shareholder of, and going to continue to be a proud shareholder of and a buyer of for quite some time here. Now, in regards to their last earnings, they beat on EPS, but they have a revenue problem right now. They missed on revenue by about $10 million, which goes to show you kind of the economic environment we're in right now. It's a tougher environment. But here's the deal, okay? And here's why I'm so excited and why I think this stock is a great deal. Revolve right now is trading at in terms of this year's earnings expected, about 26, 27 times. That's a forward P on the stock. Now, if this was just a department store or something like that, I'd say that's too rich. But the fact is, like, this is like the new age department store for, like, Gen Z, for the millennial generation. Specifically, obviously, they really cater to women. And when I look at a company like this, like, I'm expecting they've been a double-digit grower in terms of revenue almost every single year for the longest time. This year, they're not going to do that. It's a very tough economic environment. They're coming off on some pretty tough comps. They're not going to do that this year. But I believe starting next year and going in future years are going to get back to double-digit growth. And I believe whatever they do for a growth rate in future years, I believe in terms of revenue, I believe they're going to do a lot more in terms of net income, which obviously you're going to change the value proposition for what you're willing to pay for a company like Revolve. So for me, I love the balance sheet of this company. It has a great balance sheet. I believe it's going to be a double-digit grower, EPS and revenue, and I believe I'm actually getting a pretty darn cheap valuation on this stock now at this point in time. And I don't look out there and see a lot of competition for them, to be quite honest. The old department stores are not competition for this company, okay? I can just tell you that much. And in terms of like Amazon, Amazon's always there as a competitive threat. By the way, we might talk about Amazon a little later in this video. Amazon might be one of those stocks I'm buying as well. So RVLV, $15 stock. Absolutely love this one for the next many, many years. The second stock up here of this bunch is Cheesecake Factory. Cheesecake Factory is a little over $30 a share right now. And this is a pretty easy money play in my opinion, okay? Cheesecake Factory, I mean, if you haven't been to the Cheesecake Factory, have you even lived a life yet, okay? You got to go to the Cheesecake Factory at some point in life. Get one of those cheesecakes that has like 1,000 calories in it. Oh, so good, and makes you have to go to the gym for 6 hours, okay? Cheesecake Factory, obviously, arguably the most successful standalone restaurant in the United States of America, okay? And there's obviously international locations as well, but it's absolutely incredible. But the thing that's hidden about Cheesecake Factory is they own this other brand called North Italia. I can tell you this opportunity for North Italia is immense. I can see there being hundreds of North Italias around the United States of America over the next 5-10 years. This North Italia, it's phenomenal. I've gone to several locations, and I can tell you I've tried everything on the menu, and it's amazing. Okay, the chefs there are phenomenal. Their recipes are insane, and I can tell you when people go to North Italia, a lot of people like to drink. Some people drink too much. Okay, let's just put it that way. Now, in regards to North Italia, here's the deal, okay? Remember I talked about drinking earlier? That's a straight profit business, okay? Here's the deal. As I say, men lie, women lie, numbers don't lie. Look at the numbers, okay? The first quarter of 2023 comp store sales versus Q1 of 2022, 9% up year over year, okay? As far as the first quarter of 2023 comp sales versus the first quarter of 2019, they're up 30%. 30%, okay? And so this is a brand that has incredible opportunity. And you see even the company mentions, potential for 200 domestic locations over time. I can see there being easily 200 domestic locations over time. Incredible opportunity. Now, here's the thing about cake. They don't just own Cheesecake Factory in North Italia. They also own all these other brands. And basically, these brands are kind of like them testing to see, are these the next North Italia? Are they the next Cheesecake Factory? What are the margins looking like? What are the revenues looking like for these different, brands, right? These different restaurant chains. What's the wait time on a Saturday night looking like? Or what about the wait time on a Wednesday night, right? And so this is just kind of like, when you're buying into a lot of these different restaurant companies, you're kind of just getting like a few of the brands that they own that are successful. This one they like to try a lot of different stuff and see what clicks and what doesn't. I think it's brilliant idea. Now, they're also expanding units right now, okay? So they're expected to grow and basically have 20 to 22 new units planned for this year, okay? Now, that compares to 14 new restaurants opened in 2021 and only 13 new restaurants opened in 2022. So this means growth is coming, okay? Now, I think they can open easily 25 to 35 new locations every year for as far out as I can see. When I look at all their different restaurant opportunities here, and when I just think about the North Italia, they could start opening 10 to 15 North Italias easily a year, in my personal opinion, right? And there's always room for some more Cheesecake Factories out there. So I don't see this slowing down. If anything, I wouldn't be surprised if the following year they open 25. Never mind if there's a situation where the commercial market weakens more. I think that could open up some other opportunities, right? Let's say there's a weaker economy, some of the let's call it not as well run restaurants go under, or there's a situation where some retailers that are kind of questionable that taking up a lot of space out there. I think the opportunity for this company to grow 25 to 35 units a year is immense. Now, here's the deal, okay? Cheesecake Factory is the big dog of the entire restaurant space. If you look at highest unit volumes, Cheesecake Factory eclipses everybody by a large margin. Okay, a large margin. Now, Texas Roadhouse is a company I also personally own. Texas Roadhouse, great company. Okay, maybe even better well run than Cheesecake Factory is debatable. Both are phenomenal. Texas Roadhouse has a better balance sheet. Okay, but the bottom line is nobody's doing the numbers No one's doing the numbers that Cheesecake Factory is doing, okay? No, there's always a lot of worries about recession. What happens if recession? Do they start losing money? We can look back at data. That great thing about Cheesecake Factory, they've been around for a long time. We can look back, okay? 2008, profitable, very profitable. 2009, profitable. 2010, profitable. Now, this was in a horrible economy, right? We were battling around 10% unemployment. A lot of people felt like the government numbers were not, let's just call it that, reliable, and we were actually had 15 or 20% unemployment. Not going to get into that debate. But nonetheless, folks, okay, the economy was horrible in those years, and Cheesecake Factory still did very well. And you even look at free cash flow. Look at 2008, $85 million free cash flow. 2009, $163 million free cash flow. 2010, $128 million. Even in those bad economic years, they were still putting up nice numbers, very nice numbers. Now, I want to draw your attention to something very important here, okay? And that is 2022. So, obviously, 2022, bad numbers. These are bad numbers for Cheesecake Factory. $1.51 EPS, right? $50 million free cash flow, very bad numbers. So, what happened? Well, inflation happened. Worst inflation in decades that they had to battle. Price of everything, I don't care if you're talking about tomatoes and eggs or pasta or whatever it is, that went into their business. Wages went up immensely. And it's a really tough thing for restaurants to battle. And, ask your local restaurant how they had to deal with that. It's very, very difficult. And so just do keep in mind the profitability and free cash flow should be in a much, much better place over the next several years than it was this past year, regardless of actually the economy. Now, here's the deal. I'm getting this company for a dirt cheap valuation, okay? I mean, absolutely dirt cheap. They're expected to do, this is analyst average, 274 of EPS in 2023, 338, 2024. Here's the deal. I'm paying like 11 times this year's expected numbers. I'm paying less than 10 times next year. I mean, for a company that, in my opinion, is going to be opening 20 to 30 new restaurants a year and is going to be able to grow revenues on top of growing EPS at a much more substantial clip, especially over this next couple of years, this is kind of dirt cheap valuation for me. And so I really like it from that context, right? Now, on top of that, here's the other important point. Cheesecake Factory pays a 3.36% dividend yield, all right? Now, here's the deal. Remember those EPS numbers we were talking about? 274 is expected this current year, 338 next year. Well, here's the deal. They're only expected to pay out a little over $1 of dividends, right? So what this tells me is likely the amount of money they're going to be able to pay in dividends in future years is going to be immensely more than what they're paying now. So although I'm buying the stock right now and it looks like I'm getting a 3.3% dividend yield, right? In reality, I believe for the shares I'm buying, my dividend yield will really be 4%, 5%, 6%, 7%, 8%. And that will happen pretty darn quickly. And this is a beautiful thing about buying dividend stocks when they're really undervalued, which is a rare opportunity you kind of get in the market, is when this is a situation that happens, and I experienced this with a stock like TPR, like I own, Tapestry, right? Where when I was buying that stock, it was a great high dividend yield already. And now, based upon the shares that I bought for that company and based upon the dividends they're paying now, like I'm getting some insane yield. As somebody did the calculations on it, I think it was something like an 8 or 9% dividend yield every year. So I'm making a huge return on investment, and I don't even need the stock to go up. Never mind if the stock price appreciates over time, which obviously great companies do. That's just another lever there, right? And that's a beautiful thing. And that's one of the most, what I just shared with you right there, that's one of the most underrated things about dividend stocks that you never hear talked about, is the companies that continue to grow are going to be able to up their dividends more and more and more. And the dividend yield you're getting now is small compared to what you'll be getting in a few years. Is very similar to real estate, becoming a real estate investor. If you know anything about real estate investing, right? There's two exciting things with real estate investing. One is you buy the property, and guess what? Homes appreciate over time. So whatever you're paying for the property today is likely going to be a lot cheaper price than that home would sell for in 10 years, 20 years, 30 years. The other thing is the rent you can make. But not just the rent you make today, but the rent you make next year, the following year. That's a beautiful thing about that. And it's a very similar concept to dividend investing, okay? And so that's why Cheesecake Factory, second one. Third stock I'm planning on buying here is PayPal. PYPL, okay? PayPal stock. It's about $60, a little over $60 a share right now. It's the easiest money I've seen in the market since Meta in the fourth quarter of 2022. When this stock dropped to $100, it was like, how? How could this stock be at $100? Then when it dropped to 60, it's just like laughable. It reminds me a lot of Meta in the sense of like when Meta dropped under 150, it's like, this is insane. Like, how is this happening? And then when it dropped under 100, it's just like, you got to load it with both hands. And that's exactly how I feel about PayPal right now. Okay. And we'll talk about why the stock's actually down so substantially, because it's not the numbers. I can tell you that the numbers are tremendous. Okay. Now, when you buy PayPal, there's a few things you got to understand. You're getting PayPal, right? You're also getting Venmo. PayPal and Venmo, I say most people watching this video right now, you have either PayPal or Venmo downloaded on your smartphone. You might even have both of them, okay? I know certainly I do. Two of the most popular apps in the finance related space, right? Always. But the business that's hidden with PayPal that not a lot of people see or know about unless you really dive in deep here is a beast business. And this is called Braintree, okay? Braintree it's not like some kind of app, you download that everybody that's an average person out there uses. This helps companies run transactions on their back end, okay? And the thing that's really exciting about Braintree is they do it all seamlessly where you can pay with PayPal, you can pay with Venmo, you can pay with credit cards, debit cards, you can pay with Apple Pay, Google Pay, all in one spot, which is beautiful because I can guarantee you a lot of you guys have wanted to pay with a certain way and you weren't able to pay with that certain way in the past, right? Maybe you wanted to pay with Apple Pay or Google Pay or you want to pay with PayPal or something and you haven't had that opportunity. Braintree allows you to be able to pay with anything, okay? In terms of the companies that are working with them, they're working with a lot of big dog companies now, okay? Airbnb, Yelp, GitHub, Dropbox, Honest. Man, at least somebody's making some money from Honest, right? Six Flags, Grubhub, PagerDuty, Basecamp, Stitch Fix. It's incredible, okay? OpenTable, StubHub. I mean, the amount of times you probably have used Braintree and just not realized it because, you're just using a, payment processor and you don't realize it is immense, right? Uber. I mean, it's incredible how many different big companies this company's working with, and I just see it being more and more, right? Because there's more and more of a need to have all these different services because so many people want to pay different ways, right? And I think if anything, that's going to get bigger. The fascinating thing is in 2012, Braintree was actually acquired Venmo for $26 million, right? And then obviously, PayPal bought it then, and that's back when PayPal and eBay were together, and then eBay split into its own thing, and then PayPal became its own thing with Braintree and Venmo, right? But it's crazy to think that Braintree actually was the ones that acquired Venmo in the first place, right? Now, in terms of their most recent numbers, and keep in mind, this is in a kind of a tougher economic environment. These are incredible numbers. Total payment volume grew 10%, 12% on an FX neutral basis. GAAP operating income came in at $1 billion. That grew 41%. Oh my gosh. Non-GAAP operating income was up 19%. GAAP EPS grew to 70 cents compared to 43 cents. That's a 61% growth. Non-GAAP EPS grew 33%. Free cash flow came in at $1 billion. Operating free cash flow came in at $1.2 billion, right? I mean, the numbers are incredible. This stock is not down because of the numbers. I can tell you that much. We'll go through that in just a moment. And it's not down because of valuation, because the valuation is dirt cheap on this company. I'll show you that in just a moment, okay? No, they also just raised their EPS guidance for the year. Okay, fiscal year 2023 GAAP EPS now expected to be $3.42 compared to $2.09 last year. Non-GAAP EPS now expected to grow 20% to $4.95. Now, they're also doing a huge share buyback right now. So if anything, you should if you're a buyer of PayPal stock, root for the stock to be low for the rest of this year. One is, so obviously, if you're a buyer, you want to buy the stock for cheaper, right? If you want to build this position over the next 3, 6, 9, 12 months, whatever. But also, the company's going to be able to buy a whole lot more shares back the lower the stock price is. So if anything, you kind of got to hope the stock price stays low. Now, why is the stock price down so much? Okay, it's not because of numbers, and it's certainly not because of valuation. I'll show you exactly why the stock is down immensely and why it's not going anywhere right now. Dan Schulman, president and CEO of the company, he's going to be stepping down of this company here at the end of the year. Okay. Now, they haven't found a new CEO yet. And so a lot of people on Wall Street they look at PayPal as a don't touch right now. They don't want to touch the stock because they're like, well, I don't know who the new CEO is going to be. I don't know if they're going to focus on revenue. I don't know if they're going to focus on net income. I don't know if they're going to try to focus on both. I don't know if they're going to try to split off businesses. I don't know what they're going to do, right? And also people are confused about who will be the future CFO of the company, right? Because a lot of times CEO changes, CFO changes. Like people are like, I don't know. And so a lot of people don't want to touch this right now. The moment a new CEO is announced and the vision's understood, right? Which could take a few months for them to explain the vision out there. That's when the stock starts to take off like a rocket ship, in my personal opinion. It could happen before then, but I think once there's clarity there, that's when people are going to feel much more comfortable, because then they'll know, like, oh, they're going to really just go after revenue, they're really going to go after net income, and those sorts of things, right? The valuation is dirt cheap. I can't lose on this stock. I mean, the forward P is 12. 12 for PayPal? They're growing double digits. They're going to grow EPS, 20%? I mean, for a company with these sorts of growth rates, I should be paying a minimum of a 24 P. But honestly, I should really be paying a 30 or 40. So that's why I don't think it's a stretch to imagine this stock goes up 100%, 200% in a short amount of time. When I say short amount of time, I mean in 1 to 2 years. If PayPal stock is 100% higher than it is today, even 200% higher than it is today, in 24 months from now, I will not be surprised at all. At all. The valuation is dirt cheap on this company, okay? So that's PayPal. That was my third stock up here, the stocks I'm buying now. What about the fourth one? The fourth stock I'm buying now that I think is a tremendous opportunity out there is Whirlpool stock. WHR, Whirlpool stock, okay? So looking to buy this one as a new stock here, okay? Whirlpool, I understand, not the sexiest company in the world, right? I mean, these are the brands Whirlpool owns. If you didn't know, it's a lot more than just Whirlpool, right? But Whirlpool has a lot of things going for them over this next, in my opinion, 24 months or so that is a lot more exciting than meets the eye, okay? Here's the first thing. Now, remember the products Whirlpool ships around. Super heavy, big, bulky products, right? Remember what happened to freight rates, right? In terms of container rates, they went to the moon. And so anything that Whirlpool had to ship overseas or had to have shipped to them overseas, which is an immense amount of things, right? They were paying through the roof for pricing on all that in the back half of 2021 and all through 2022. Guess what? All the container freight rates have come down back to normal levels. This is going to be huge for Whirlpool's margins, in my opinion. And you're going to see Whirlpool's margins go up substantially over the next 12 to 24 months, in my personal opinion, on the back of this, plus trucking rates. All these big washers and dryers and ovens and all this stuff they sell, right? It's got to get transported on trucks, right? And you look at trucking rates, they've come down immensely year over year. And so all this transportation will be reflected in their margins, and it will get a lot healthier place, okay? Now, on top of that, home sales have been awful, okay? Existing home sales have been awful. When you're under 5,000 units for a home sales, you're kind of in like basically a housing recession at that point in time, which we've been under 5,000 for a while now, okay? Like pretty much, over a year? Now, when you go under 4,000 units, you're basically in a housing disaster. Now, the only reason housing prices haven't come down as much as the great financial crisis, for instance, is there was a whole different scenario with foreclosures and whatnot. But in terms of people moving, not a lot of people have been wanting to move because mortgage rates has just been so dang expensive, right? So why would you move out of your house that has a 2.9% mortgage on it, right? Because you refinanced. Or a 3% like everybody refinanced in 2020, 2021, right? Or the beginning of 2022. Why would you move out of that to go buy another house at a 7 or 8% mortgage? It doesn't make sense. But in my opinion, these 7, 8% mortgages, 6% mortgages are not going to last much longer, okay? And when those come down, the housing market's going to be boosted up in a major way, right? Trueflation is one of the best ways to look at, what's going to happen with inflation numbers from the government level, okay? And what we're seeing is trueflation numbers are now consistently coming in under 3% now at this point in time. So I would say there's a very high probability the Fed's going to lower Fed funds rate in either the third quarter, fourth quarter, and that will obviously be reflected, and that's going to affect everything. When Fed funds rate goes up or down, it changes everything. It can change credit card rates, auto loan rates, obviously mortgage rates. And so when mortgage rates come down, which I wouldn't be surprised if they come down a lot over the next 12 months, what's going to actually happen is the existing home sales is going to go up immensely, because then people can move and won't look at it as like, an impossible thing to do, right? Now, here's the other deal with Whirlpool. If we're looking at 2024 numbers, trading at about a 7 forward P based upon 2024 numbers, we could say, what if they did half that EPS? Half that EPS. Then I'm paying like a 14? That's still not a lot. So when I look at Whirlpool, there's a lot of protection here, okay? A lot of protection. Dividend yield 5+%. That's beautiful. So Whirlpool, not the most exciting play at face value, but when you look at the 5% dividend yield, when you look at how bad existing home sales have been, and those will improve, which will definitely help Whirlpool's numbers. When you look at the costs of their business coming down immensely for shipping anything, and obviously trucking, when you put all these pieces together, I can see Whirlpool's margins expanding quite rapidly over this next 1 to 2 years, and obviously their profitability as well. And do remember, at the end of the day, things break. So even if the housing market's in a weaker place for the rest of this year, which is definitely a potential, at the end of the day, washers, dryers, ovens, all that stuff breaks, and then you got to get new ones, right? And so I like Whirlpool. It's going to be a new one for me. You'll likely see it out there, okay? Number 5 stock of these 7 is Amazon. I've continued to just load up on the stock this year. This is my number one. It's been my number one focus for stocks. I think PayPal is eclipsing them, but Amazon's still a steal deal, okay? Remember, with Amazon, you're getting the e-commerce business that everybody knows about, and you probably place 1,000 orders a year on, right? And you see all those trucks driving around your neighborhood. You get Amazon Web Services, which is honestly more valuable to Amazon than the e-commerce business, and that's hard to even comprehend. You see all those massive Amazon warehouses. You see all those trucks driving around your neighborhood. You have the app on your phone. You buy a bunch of stuff on Amazon, and I think they have a business that's more powerful than that is immense. But the world's run on Amazon Web Services, okay? They have their ads business, which has grown into a behemoth. They have Whole Foods, they have Twitch, and they have other businesses as well, okay? And when it comes to Amazon, here's the deal, okay? This company's going to come in with epic beats this entire year, in my opinion. They just beat EPS very nicely this past quarter. They beat revenue by almost $3 billion, okay? And here's the deal. Analysts have their numbers way too low. Amazon's done a bunch of job cuts that you're going to start to see help the company's profitability over the next several quarters, okay? Analysts have them only doing $1.56 of EPS this year. I think they're going to do $2 plus in the bag, okay? So what you think you're paying for 4P is actually way lower for Amazon than what you think, okay? Next year, I have them doing $4 plus of EPS. Because remember, all these job cuts that have gone through this year, that's all going to be obviously reflected in the back half of this year, but also throughout the entire 2024, while revenue's eclipsing and going up and up and up for the company, right? And then 2025, I think they're going to do $6 plus. So the price you're paying for Amazon is exponentially lower than what analysts have out there, in my personal opinion. And Amazon's done this before in the past where they've blown away what people were expecting them to do, okay? So Amazon over the last 20 years has really been a company focused on revenue growth and mass spending, right? We're buying, we're going to build we're going to have a ton of airplanes. We're going to have this truck infrastructure. We're going to have warehouses everywhere, right? Mass spending. Revenue growth. Amazon's story over the next 20 years, in my opinion, is going to be much more around net income growth and spending control. The days of them building 1 million warehouses in your city, now, in my opinion, are gone now, okay? They're going to still be growing. They'll still always be adding, space here and there. But that craziness that you saw over the last 20 years is now come to an end, in my opinion. And so spending controls, net income will be the story for this moving forward. And so that's why this is one of many opportunities I see in this market. That's a great opportunity. And there's not a lot of great opportunities in big tech, but Amazon's one of those, in my opinion, okay? Next one up here, okay? 6th one, not a stock, something else, okay? And that is Estelle. So Estelle's been treating me actually pretty respectable so far, okay? The past 6 months, it's been doing very well. Estelle is basically a 3x against the Dow Jones Industrial Average, okay, on a daily basis. Now, in regards to this, right, I still like Estelle as a hedge, right? And obviously, I'm positioned long in the market. Most of my money's in long positions. So if we have major weakness in the market goes down 20, 30%, something crazy happens, right? 40%, who knows? I like to have some hedges. It protects me, right? In terms of the Dow, here's the biggest weightings, okay? You have United Health, right? They could face election pressure. We'll see. Sometimes some of these healthcare-related plays, they face election pressure, which obviously, we're going to have a presidential election coming up in a year, and so they could face some pressure there. There could be some worries about that, right? Microsoft has a very rich valuation right now. Goldman Sachs is lost right now, in my opinion. They're trying to really figure out the direction of the company. McDonald's is a bubble, okay? Been a bubble for a bit here. Home Depot's struggling. Salesforce kind of in an iffy place right now. They're actually down 6% plus after hours right now. And Visa obviously has very hard comps to comp against on a year-over-year basis. And obviously it's a company that would get hit pretty immensely if there is a bad recession, right? And so I think it's a pretty good hedge on the market. It's not as attractive to me as it was 6 months ago, but I think it's a decent hedge. Now you might say, why not SQQQQ, right? Which is basically the same thing, but it's going against the Qs on a 3x leverage on a daily basis, right? And I will say, this one's gotten a lot more interesting. 6 months ago, this wasn't even remotely interesting to me. SDAO by a mile. Now it's closer, but I still do prefer SDAO over SQQQ for an overall hedge, okay? But I will say it's gotten better, okay? So obviously, Microsoft's the biggest weight. That's trading rich right now, right? But it's probably going to continue to trade kind of rich, to be honest. I mean, Microsoft, can it pull down 10 and 20%? Sure. Can it pull down 50%? That's very doubtful in regards to that, right? Apple is trading rich and it has big problems right now. And we'll go actually over that in just a moment, okay? NVIDIA is kind of scary both ways, in my opinion, for upside and downside. That one's just, you don't know what to expect there. I mean, if they come in with another great numbers, geez, that stock's going to boom, right? Amazon's going to be booming for this next 12 months. Meta's going to be booming for this next 12 months. Google's actually undervalued, and Tesla's kind of scary both ways. Tesla could come in with way better numbers or way worse numbers than anybody expects. So I think SQQ is more confusing than I would say than playing something like SDAO, okay? Now, in terms of seventh position up here, this is also would be a hedge for me that I'm looking at, and that's Apple, okay? I'm looking to likely buy some Apple puts, and I'll show you the strike prices here in just a moment, okay? And here's the deal with Apple, right? Apple's trading at an extremely rich valuation right now. I mean, approaching a 30 forward P. No, that would be fine if Apple was a growth company. The problem with Apple is this is a business in decline. And that's not my opinion, that's factual. Look at their last earnings, and you're going to see this is now a business in decline, okay? Doesn't mean they're going to be in decline forever, but it is a business in decline nonetheless. Now, here's the deal with Apple, okay? Expected to have revenues go down this quarter. Somehow, analysts are expecting them to grow revenue the following quarter. But overall, the year revenue should be down for this company. And then analysts are magically expecting next year them to have growth again, right? 6% plus revenue growth. I'm not so convinced they're going to have revenue growth, okay? Here's the deal. I don't know if you guys have seen leaks for the iPhone 15. It's the same phone again, okay? No, they basically haven't had a major change for the iPhone since 2019 launch of the iPhone 11, okay? And I think Apple's gotten really complacent because they got all that stimulus money was pumped out there, everybody, staying at home, and I think Apple thought, oh, this design's just going to work forever. When in reality, people just were flush with so much money, they didn't care, like, oh, let's buy a new iPhone. That's not going to cut it anymore. You need to actually come out with something that's going to be a game changer to get that next level of growth out there, okay? I think they've actually gotten really, really complacent here. And what I'm looking at is this is a business that, Rona saved this company. They were having some problems before Rona actually happened, okay? You look at the iPad business and the trends that was going on, for years prior to Rona. Then all of a sudden Rona happened, all the stimulus money pumped out there, everybody has to be at home, school from home, everything from home, and iPad business boomed, right? It's long gone. Those days are over now at this point in time, so don't be surprised if the iPad business shrinks now at this point in time, okay? AirPod sales have been going down for several years now. This is a business in decline, and I don't know if that's getting better anytime soon, to be quite honest, in terms of the AirPod business, okay? Their Mac business was supercharged, obviously, by Rona, and now that's ended, and their Mac business is starting to decline quite substantially, right? PC shipments have not been in a good place, and in terms of services, the growth is starting to stall out there. Services used to be in the bag, 20% type growth, and now they're having trouble growing like single digits. So when I look at Apple, I think there's a lot of risk from several different angles here, which is why I think it's an interesting kind of hedge in the market. Do I want to risk the farm on this? Absolutely not. Absolutely not. But do I want to do it as a partial hedge? I like it. I'll be looking at something like March 15, 2024 hedge, something like 140 strike, pay maybe $4 for those. I could be even looking at something that's around the current price of the stock, which is around, $175, $180 puts, and buying something around there if I want to play a little safe. I might do something like 140s and then maybe 180 strikes, something like that, and kind of split the money a little bit. And it's just a good hedge. If the economy gets worse, Apple's going to get hit really hard, and especially given that iPhone 15 has nothing coming that's going to excite anybody and make anybody say, I got to go get that next iPhone. So appreciate everybody joining me as always, folks. Thanks so much. Beast video. Once again, I invite you to apply for my private group if you're somebody that wants to take your investing game up to the next level, and you can get everything that I have up here that I've generated in terms of knowledge over the past 15 years directly to you, and as well as be part of our Discord chat with the 6- and 7-figure members and all those other perks that come along with that. Much love and have a great day.